Hi everyone, Assalamualaikum warahmatullahi wabarakatuh. Today our team will present to you on the topic of Shariah Audit and its current issue. This is our team of 3 members, Khalida Maisarah, Asila Zawani, and me myself, Laili Losna. So here is what we are going to touch on: the introduction of Shariah Audit, the difference of Shariah Audit with the conventional audit, Shariah Supervisory Board (SSB) and its function and how it relates to the current issue, the self-review threat and our current issue that the SSB self-review threat threatens its independence with the recommendation for the issue, and lastly, the conclusion. First, I'll start on the introduction of Shariah Audit. For introduction, Shariah Audit is one of the most important aspects of Islamic bank operation as it relates the way in which Islamic banks are held accountable. Accountability is one of the most important issues in Islamic banking operation, as Islamic banks must ensure that their operations do not violate Sharia principles. Islamic banks were founded with the purpose of conducting business within the strict accordance with Islamic Sharia. Therefore, Sharia bank must follow Sharia principle and do not engage in interest-based transaction. As a result, the governance institution is distinct from the conventional institution. In fact, Sharia audit must be conducted in accordance with the Sharia Supervisory Board (SSB), fatwas, ruling and guidelines, as well as the accounting and auditing organizations for Islamic financial institution standards, the National Accounting Standard Guidelines, and relevant Malaysian legislation and regulation. As a result, the Sharia audit must not only adhere Islamic law but also to common law. Basically, Sharia auditing techniques are primarily meant to improve the attention on the financial part of institution report without interfering with conventional standards. Move on to the definition of Sharia audit. Sharia Governance Framework by Bank Negara Malaysia defines Sharia Audit as a periodic assessment conducted from time to time to provide an independent assessment and objective assurance designed to add value and improve the degree of compliance in relation to the business operation of Islamic financial institution business operation, with the main objective of ensuring a sound and effective internal control system for Sharia compliance. In this case, internal auditor who have received adequate Sharia-related knowledge and training can fulfill this duty. There are 3 main objectives of Sharia audit. First, to report the finding of Sharia compliance and non-compliance. Second, to assess the degree of non-compliance and its effect on the IFI as a whole. And the third is to recommend corrective action, improvement, and rectification necessary. According to the Sharia Governance Framework, the scope of Sharia audit includes: first, the audit of financial statement of IFI. The second is the compliance audit on organizational structure, people, process, and IT application system. And third is the review of adequacy of the Sharia governance process. We move to the need of Sharia compliance. Why we need the Sharia compliance? Sharia compliance, according to the Accounting and Auditing Association for Islamic Financial Institutions, means a compliance with Sharia rules and principles as reflected in the fatwas, ruling, and guidelines issued by them. Since we have an Islamic banking system, Sharia compliance is required. Furthermore, to distinguish the Islamic financial system from conventional financial system, and next is to ensure acceptance, validity, and enforceability of contract from Sharia point of view, and lastly, to boost the public confidence or perception of the stakeholders. Next, we'll move to the second subtopic, which is the main difference between Sharia audit and conventional audit. The conventional audit here means that the regular audit that we already know and learn. So, the difference will be in first element is the relationship party. The conventional audit cover the entity, auditor, and user, while Sharia audit cover the entity, auditor, and a broader range of users. The focus of audit here, conventional audit focus on the financial statement assertions, while Shariah audit focus on the financial statement as well as processes, contracts, personnel, system, and performance. The next element is the basis for audit. Conventional audit use IFRS, while Shariah audit use Shariah rules and principle, BNM Shariah guideline, Negara Shariah governance frameworks, and AAOIFI standards and appropriate parts of IFRS. Next, the sufficient evidence. For conventional audit, it obtains documented evidence through physical observation, sampling, recomputation, and analytical review and witness report, survey, etc. While the Shariah audit through SSB ruling, fatwas of international and national fiqh boards, and all other conventional evidence. For the written assurance report, in the conventional audit, the auditor prepares a standard audit report, while for Shariah audit, a Shariah auditor issue a more comprehensive report.
Assalamualaikum warahmatullahi wabarakatuh. I'm Asila and we will continue with our Shariah audit area. Our Shariah audit area is Shariah Supervisory Board, or SSB for short. So what is SSB? Before we can discuss SSB, we need to briefly mention the Accounting and Auditing Organization for Islamic Financial Institution, or AOFI for short. As Ms. Lally has mentioned in the previous session, AOFI is an international body that provides a Sharia-compliant audit standard. The creation of SSB was based on a statement provided by AOFI. The SSB is an independent body of specialized jurists in Islamic commercial jurisprudence. AOFI merely emphasized on each bank to create their own SSB for supervisory and consulting purposes, but some countries have taken it a step further. In countries where Islamic banking is well established, their central banks require Islamic financial institution to have an SSB, and they have detailed its composition, the qualification of its members, and etc. So what does centralized mean? Well, centralizing simply means that the government played a hand in making a nationwide SSB. Example of countries with centralized SSB are Malaysia, Sudan, Kuwait, Pakistan, United Arab Emirates, and Indonesia. In fact, Malaysia's own centralized SSB is called Shariah Advisory Board, and it is supervised and regulated by Bank Negara Malaysia. In theory, the role of SSB involves 6 areas. First, to provide fatwas that certifies permissible financial products. Second, to undertake financial audits to ensure products comply with guidelines. Third, to calculate zakat payments. Fourth, to disclose of non-Sharia compliant incomes or earnings. Fifth, to provide advice to the bank on the distribution of income to its shareholders or depository or investment account holders. And sixth, to provide guidance to the bank on its wider social role. As you can see, one of the SSB function is to provide audits. Thus, as a body that also participates in Shariah audit, it brings us to our current issue. SSB faces an independence problem, specifically in regards to self-review. In addition, SSB may also face conflict of interest since they are hired to do audits by institutions that depends on their fatwas.
Hello, my name is Khalida and I'm going to continue with the next part, which is current issue. Before we jump right into current issue, I want to explain a bit regarding auditor independence. So, what is auditor independence? Auditors are expected to provide an unbiased and professional opinion on the work that they audit. When an auditor lacks independence, the auditor report they provide is effectively meaningless to those who rely on it. Now, let's jump into current issue. In Islamic financial institutions, SSB oversees the governance in order to bring transactions under strict adherence to the Sharia principles. In addition to that, the function of SSB is seen as being similar to the company auditors, as they too conduct audits to ensure compliance to Sharia. In other words, the SSB are responsible for providing fatwa, and yet they also conduct an audit of their own work. thus raising the issue of independence, which is a fundamental concept in auditing, as auditors cannot audit or examine their own work. This issue gives rise to the self-review threat, which can threaten the independence of SSB. Now, let's review what is a self-review threat. When auditors encounter the risk of assessing their own work, this is known as the self-review threat. For instance, if the external auditor performed the accounting work and then audited the financial statements, there's a chance that the auditors won't see any flaws in their own work because they are afraid of being penalized. Okay, let's go back to the issue. The independence of the SSB is impaired as they are involved in supervising the products and operations of Islamic financial institutions, while at the same time conducting the Shariah review or Shariah audits on that product. So this also means that there is no clear line of separations of duties, which is crucial in the practice of good governance. In addition to self-review threat, researchers have also questioned the independence and conflicts of interest with SSB, whose employment and compensations is determined by the same institutions whose bottom line the SSB's fatwa can make an enormous difference upon. Due to this, SSB may also be exposed to some challenges such as the lack of decision-making and the possible interventions by the management. Now, I will pass the presentation to Ms. Asila to provide the recommendations for the current issue.
In this section, we will mention a recommendation for the issue that SSB faced self-review threat which threatens its independence. A recommendation that we propose is to implement external Shariah audit. In fact, AO5 itself acknowledged that external Shariah audit will improve stakeholders' confidence. Therefore, they are contemplating on implementing external Shariah audit as a separate function of the Shariah governance structure. However, it should be noted that Bank Negara's Malaysia current practice in Malaysia already includes a robust annual Shariah inspection of all Islamic financial institutions, and users felt that there are already a robust third-party Shariah compliance check being carried out by the regulators in Malaysia, even though the results of the audits are normally not publicized. Nonetheless, Islamic financial institutions will have to reassess the needs for clear separation of duties to avoid misperception of stakeholders for the SSB or Shariah auditors' independence. And finally, we have reached our conclusion. Clearly, Shariah compliance is vital, and the negative consequences will not only have a financial impact but will also be a violation of Allah subhanahu wa ta'ala instructions and a hindrance to Allah subhanahu wa ta'ala's blessing. Other than the issue of Shariah auditors' independence, there are still other issues and challenges in Shariah compliance auditing. Despite the challenges faced in Shariah auditing itself, the Islamic financial institutions are also facing challenges from well-established conventional financial institutions. Thus, it requires an urgent attention to close the gap, as this may have an impact on the stakeholders' confidence on the Shariah compliance of the Islamic financial institution products and service on its operations and activities.
That's all from me. Thank you for your time. I hope that this presentation was able to enlighten you on the Shariah audit independence threat, especially the Shariah Supervisory Board. Assalamualaikum warahmatullahi wabarakatuh.